Andrew, what is Remara's focus within the private credit sector?
Oh, well, thanks, Drew. Our focus is prime and secured. So we like asset-backed finance. So we're looking for a lot of granular risk, and we're making sure we're lending to prime borrowers, and we're getting security with those. So that kind of covers us for any potential risks that might come up within that portfolio.
And can you tell us a bit more about asset-backed finance and why advisors should be paying attention to it now?
Well, it has a couple of attributes that are very strong for advisors. So it's a naturally self-liquidating asset class. So that means monthly you're getting principal repayments through the loan pool. What that effectively means is you're reducing your risk profile over time. You're getting to redeploy your capital, and there's a lot of naturally inbuilt liquidity. As I said before, the granular nature of that also means that you're limiting a lot of the risk profile because no one single loan could kind of create a loss across that portfolio.
How does Remara manage the trade-off between liquidity and returns that comes with credit markets?
Yeah, look, that's a really good question. So a lot of our platform is built on purchasing credit that we originate. So that strong origination pipeline basically means that we've got first line of sight on the credit. Means that we're not competing as hard with the broader market in terms of acquisition of credit. And it means we can defend the return profile for most investors throughout a cycle. So while we'll go through the natural evolution that everybody else will in terms of credit spreads tightening or widening, it means that impact for our end investors is a little bit more subdued.
And what role do you see asset-backed finance playing within traditional portfolio construction?
That's a really good question. I think the opportunity set is one that can take over a little bit more from bonds. I think if you're looking at bonds, they're obviously fixed in nature. They do have variability from a capital perspective as you start to have transitions in rates. We saw that over the last few years with the rapid rate rises that the RBA undertook. And where we've got asset-backed finance, they've got a lot of the same natural attributes. Very granular in terms of the underlying credit perspective, naturally principal retirement or self-amortizing. And I think the floating rate nature of asset-backed finance and the structures that you're starting to see today will be able to give investors a better opportunity to be able to get a consistent cash-on-cash yield without needing to take that capital volatility they have to take at the moment in terms of traditional bond investments.
And what are some of the themes you're seeing emerging in credit markets in Australia and around the world?
Yeah, look, this is a really good question as well. I think that asset-backed finance is definitely a pretty key theme. I think everybody's starting to look at that, going lower obligor sizes and exposure, moving away from just pure cash flow lens, which is more of your traditional corporate, and moving slightly away from construction and development finance, where again you've got good asset backing, but the ability to repay is always a bullet and it never comes on time. I think asset-backed finance globally is starting to have a real strong push because investors naturally see that the granularity in there, the consistent cash profile, the lower risk profiles through that granularity and consistent cash effectively mean that you get a very, very good, strong cash-on-cash yield. And that's pretty attractive to anyone who's a medium to long-term investor.
Andrew, thank you.
No worries, thank you.